Pořiďte si chůvičky a ven za nejlepší cenu. Právě teď na fido.cz. Lehčí život maminkám.
Alright, hi Srinivasan. Alright, now let's see. I am just waiting for confirmation that my audio is working. Can you guys hear the music? And my audio.
To myself, can't get over you. You just love yourself. It's what I made you do. Talking to myself, can't get over you. You just love yourself. It's what I made you do. Talking to myself, can't get over you. You just love yourself. It's what I made you do. Talking to myself, can't get over you. You just love yourself. It's what I made.
Leave it here. This towel, that's it. Towel. Yeah, towels, that's it. Everything is fine. No, it's okay. Okay, great. Let's see. So the video is not good, but hopefully the audio should be working on this now. I'm just waiting to get this Twitter back on.
about how to save the night with you. This is a waterfall, making us beautiful. So baby, we'll be like high, oh yeah.
All right, here we go. Okay, guys, I'm going to get started and do this stream for a little bit and see how it goes from here. So once again, the YouTube YouTube feed seems to be working, but the Twitter Periscope was terrible, and it's kind of stuck. There was no audio there, and the guys are telling me that the YouTube feed does have the audio and it's working fine. So we're gonna just do this here. I'm not sure about how well synced the audio is with my video because the network might be sketchy out here. But what I'll do is I'll just get started with just a little introduction of myself. I am Prashant Malik. I run my small personal fund called Vohi Capital from Mumbai, and I am here today to talk a little bit about my journey getting me into options trading and answer any questions that you guys might have. If you're starting out with trading or options trading or in the financial markets. A lot of the questions I might not be able to answer. Some of them I will be able to answer, and I'll try my best to be as straightforward as I can. The first thing that I want to just lay out is that some ground rules. I don't want to answer any questions that that are directed towards stock tips. I'll not be talking about any levels of particular stocks. Where something is going to go in n number of days or whatever. Nobody knows. I don't know. I don't trade in that way, and so I'm not going to talk about that. I am not going to be giving you any trade recommendations, so don't ask for any trade recommendations. There are a bunch of really good advisors who can help you with that. I am not one of those, so there's not going to be any trade recommendations here. Well, okay, just a little bit about where I am from right now. I'm talking to you guys from Prague in the Czech Republic. I'm here with my son. He's playing, representing his country, India, the AICF, the All India Chess Federation, at the Prague Open. and he's going about his games. Today is the second round, and I'm following him in his chess pursuits. So that brings me to Prague. Um, about the questions that have really good questions have come up today, and but before I get to that, I want to talk a little bit about my journey into options. I started trading way back in 1999, right as I got into grad school. Uh, I started my graduate studies in chemical engineering. Thanks, Sandeep. Thanks a lot. Thanks for your wishes. Uh, you know, I started my chemical engineering grad school in the University of Illinois. Got into the US in '99, and hell, that was one of the most dangerous times for somebody to start out in the stock market. Things that heated up like crazy the past 3-4 years, and anything with a .com name to it was hitting the roof. So just like everybody else, I got onto the bandwagon and learned pretty much the hard way. I landed up blowing up a couple months of my stipend out there in the US, and as a poor Indian grad student, that was pretty tough. So after that, I learned my lesson. I took my hands off, and I said, I'm going to get back into trying to figure out what's the best way to get this equity premium from the marketplace. Hell, I had no clue whether there was a premium out there or not. But I did a lot of reading. I was heavily influenced by Jack Bogle, and for about the next 15 years, I have been pretty much a Boglehead. I had my really nice asset allocator across the US equities, worldwide developed equities, and emerging market equities, about 30% in each of those. And things have worked out pretty well. But then, a couple years ago, I started also trying to figure out. I got introduced to derivatives, the derivatives market, and found some really good synergies or similarities between the kinds of equations that I used to derive options pricing with what I had worked on in my PhD. Brownian motion, particles, nanoparticles, all that good stuff that I worked on during my PhD. You have the similar types of partial differential equation that I use for options pricing. So that got me interested and into reading into options pricing, and that one thing led to another, and really I read a lot. I started reading a lot more. I was heavily influenced by a couple of books. I'll talk about those briefly. But one of them was by Tony Saliba, Managing Expectations, and the other one was The Options Trader's Handbook. Fantastic books about volatility, different types of options, options trading, and that pretty much influenced my style of trading. So yeah, that's how I got into options trading. I've done a bunch of things. Trying to pick stocks. Then I was an indexing guy all the way through. I still have my bunch of my long-term portfolio in indexed stocks, but I now have quite a bit of a large allocation to my trading activities. I treat it like a business, and I focus on my risk management doing that. So with that, as a pretty long introduction, I will get into some of the questions that have been asked. But before we do that, I just want to make sure that the audio is working. I know the video feed might be off, but just want to make sure the audio is working. I see a bunch of guys in there. Sandeep said hi. Thanks a lot, Sandeep, for your wishes. Srinivasan is there. So if you guys can hear me, just put something on there and say yes, the audio is working. That'll just give me some feedback and make sure that I'm just not talking to a wall out there. I know there are about 10 to 12 people watching, so that's great. Thanks you guys for joining, and hopefully I can help you out here a little bit with answering your questions. So let me dive into that. There's some bunch of really good questions that were thrown up. One of them was on how to get started on options trading. This was asked by Raj. He asked me, I'd love to explore and know more about your approach on options trading. Which charting platforms, oscillators, indicators do you use for options trading? Anything else you would recommend to a beginner like me? Okay. So I think, Raj, the first thing that you need to do is to understand what options are. Before you do any trading, just get in there and figure out what is a call option, what is a put option, and how are these options priced? What are the factors that affect the pricing of the options? Because we're not talking about just the vanilla stock price movements here that are going to affect the options pricing. And so look into that. Look into the options pricing. People get scared about, with all the different Greeks that are used, but these are just very simple factors that affect the options pricing. And without understanding any of these, it's really going to be difficult for you to extract the edge that an options trader has in the marketplace. And I'll talk about that edge a little bit as we get deeper into our discussions. But yes, first thing is get into the weeds, understand what an option is, what is a call option, what is a put option. There are a bunch of resources, like I mentioned, Tony Saliba's book, Managing Expectations. Zerodha Varsity has a fantastic resource that is very easy to understand. He's got some very cool explanations on what an option might be, a call option or a put option. So read that. Spend some time reading, and come back and ask me some questions or doubts that you have. I'll be happy to answer those when you get back to me. So let's see what else. There's another question from Moin. How do you select stocks to look at? Do you get a signal to look at in a particular chart? Well, yeah, okay. So I don't do any signal tracing or trying to predict where a particular stock might go. I don't use any moving averages. I use moving averages in the sense to get a feel of where the stock might be in relation to the past 3 months or the past month, or if it's an hour chart, to see how the stock is moving. But I don't use that information for getting into any options trades. One of the most important factors that I use for determining what kind of options trade I'll get into is the implied volatility. In any options trade, the edge that an options trader has is from the implied volatility being overestimated compared to the realized volatility over a period of time. And so that's where the edge is. So that's the single most important thing that I look at, is what is the IV of that underlying that the options are pricing. I look at the 6 months implied volatility and make my decisions based on that. There is supplementary information like the options open interest that I also look at in determining whether I'll be placing an options trade that is on the call side or the put side, or which strikes might be used for that. So, but the basic concept is that the implied volatility is always overstated in the marketplace. There's tremendous amount of data to show that is the case, whether it is the US markets or in the Indian markets on the Nifty, the Bank Nifty. we always have the marketplace overestimating what the actual move eventually turns out to be. So that's the edge we're looking at. That's what we are looking at when we're setting up trades and going through those. Okay, Srini asked me a contra question in the bull market: how effective IV during bear markets, and what are the key indicators you use and which strategy? Like I said, yeah. So IV, whether it's a bull market, bear market, doesn't matter. We're looking at the volatility. We're trading based on how the implied volatility is overstating the expected move for the underlying. Whether it's going down or up doesn't matter. Okay, there are some peculiarities about sell-offs versus melt-ups that we're currently seeing, but a call and a put option tend to be identical to each other in theoretical terms. Of course, the marketplace with the upward bias that equities tend to have, especially the Indian markets, you always have people buying put options to hedge their downside risk, and that gives a natural tendency for the implied volatility of the put options to be higher than call options. Doesn't mean that there's not money to be made on the call side. Tremendous amount of money to be made on the call side, call options. I use call ratios a lot in my trading, and I use call options, selling call options a lot. One of my most popular strategies is a call ratio that I use, selling call options. So yeah. Okay, let's see. Where is there's another very nice question that somebody sent me. Hold on, let me just check. Okay, yeah, biggest drawdown in the options portfolio. Okay, the portfolio wise, I have been lucky in terms of not having a very large drawdown yet. I don't know how that's happened, but yeah, I've had about maybe a 5% drawdown in a month. That's the maximum I've had. And so if you're talking about a losing trade, there's several things that I do in terms of managing the size of my position that allow me to restrict the drawdown for any one particular trade. And it's a combination of factors in terms of the strike prices that are chosen, the loss I'm willing to take on that trade, and always also how the different factors in the trade are set up. The time to expiration, what is the implied volatility of that particular underlying at the time of trade entry, and how much management room there is for that trade. So yeah, I have lost about the maximum on one particular trade that I've lost is about 1.5% of the portfolio on one trade, and that was pretty large. That was on the underlying, I believe it was Idea, and also once again I did that on CAT. It was a call ratio on both of them that just went bad, and we all go through the times where emotion gets the better of us, and I decided at that time not to do any trade management and just take that loss and move on. I shared one quote by Jay, Nifty Wizard, really smart guy. I have not met him yet, but I really like to.